So money has been pouring out of equity mutual funds all year long, but the last 3 weeks is also seeing that great bond rotation, out of bonds into stocks. And it's only 5 years after it was predicted. $38 billion has gone into ETF funds. 12.5 billion of that was taken out of mutual funds. And I think investors are really getting hip to the higher fees and some of the false diversification. So I think that's a pretty good move if you don't want to do individual stocks. In the meantime, bond yields, they continue to march higher, finishing the session today at their highest levels of the year. But take heart, we're still well below recent highs in recent years. Now, I think the move, though, does continue. It's not going to be the same breakneck speed for bond yields. But stocks, though, which mostly marks some time, is consolidating those gains. They did hold a key support points, particularly the major indices. Investors have to feel very, very good that this runway is clear for takeoff. Now, speaking of which, it's obvious individual investors are back because the Russell 2000 is on fire. Those are your small cap names, up 13% since November 4th. Up more than 6% for the last 3 months. Now, after the close, Facebook, by the way, announced a $6 billion stock buyback. So that might help tech in general regain some equilibrium next week. In that space, I like Yelp. That's right, Yelp. Management, of course, has made a lot of mistakes, but I think they've gotten over it. In the meantime, the stock acts great. It seems like it's going to form at least a double top at 42, but I think it's got potential to 50. Hey, if you want to check out my Trump portfolio report, it's a good weekend read and might make you some money. Go to wstreet.com.